What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, a lot of you guys were asking me, sending me messages on Instagram as well as Twitter. What do I think about QYLD versus SPHD? So, I got to make a video for you guys. I mean, a lot of you guys have been asking me, and I'm going to do a dividend stock analysis. I really think that these are stocks, monthly dividend ETFs that are very popular amongst the dividend investing community. And a lot of people praise both of these. I'm going to show you which one I believe is better, and I'm going to show you a dividend stock analysis in both of them. We're going to go a little in depth with both of these because you need to know what you're getting yourself into. So if you're new to this channel, make sure you subscribe, hit the notification bell so you don't miss future videos. Make sure you smash that like button, and you got to hit that notification bell because I sometimes will say, I'm going to do, 3 to 4 videos a week, and I'll throw a random one in like when I have some time after my shift and stuff. But I'm going to tell you, it was a long ass shift, and dealing with people bitching at work, oh, dude, it's draining. I'm going to need a drink after this. So let's check this out right now. So let's start with Invesco S&P High Dividend Low Volatility ETF. The symbol is SPHD. This is a very popular monthly dividend stock amongst investors. Some people have these in their traditional IRAs. Some people have these in their Roth IRAs. Some people have these in their dividend portfolios. Some people like to actively trade this one. So we need to know what the heck's inside of these guys and check out their dividend history, which I'll go over in the end with both of these ETFs. But let's check these guys out real quick. So at the moment, Morningstar rates them as a 1-star monthly dividend stock, and their SEC yield is 3.96%, 12-month yield is 3.71, and the year range is 31.77 to 46.49. The expense ratio is 0.30%. So we need to know what the heck's inside of these guys real quick. I'm actually on Fidelity as a reference. So this investment seeks to track the investment results before fees and after expenses of the S&P and low volatility high dividend index. This fund generally will invest at least 90% of its total assets in the securities that comprise the underlying index strictly in accordance with its guidelines and mandated procedures. The S&P Dow Jones indices, blah, 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 blah. Okay. So what is their top 10 stocks right now? Iron Mountain, Altria, Peoples Corp, Williams Companies, AT&T, Kinder Morgan, Philip Morris, Chevron, Prudential, and Amcor. So these are dividend stocks. Really I'm going to go a little bit more into detail, but they're top 10 stocks. I own Iron Mountain, Altria. I own AT&T. I'm highly considering Philip Morris and Kinder Morgan. Prudential, I actually have in my traditional IRA because I switched over Acorns and I needed to throw it over there. If I pulled out, I would have to owe, that 10%. So I kind of just threw it in there and left it alone so I didn't have to pay any fees. So let's check out a few things. I like going into even bigger detail with these stocks. So they got Edison, Philip Morris, Chevron. There's their top 10 that we went over. Prudential, Verizon, Amcor, Dow Inc., Gilead Sciences, Pfizer, Realty Income, Avi, Healthpeak Properties, Walgreens, Duke Energy, Kraft Heinz, Kellogg. So these aren't too bad. Newell Brands, that's one I had and sold. Cardinal Health, I'm high on those guys. I'm looking at getting them. Conagra Brands, I own these guys. Absolutely love them. And they have a pretty strong portfolio. Even Coca-Cola's on there. But let's check out QYLD. So here's QYLD. Obviously, the S&P is killing them because they're a covered call ETF. They're a monthly dividend ETF. They have holdings in the NASDAQ 100, which I'll go over real quick, and I'll go over Morningstar rating. But Invesco, QYLD, and SPHD were kind of neck and neck. And this is a covered call ETF. It is actually beating SPHD, and SPHD is slowly beating it. And it's a little bit more expensive by $20. Let's check out QYLD a little bit more in depth. The QYLD's Morningstar rated is a 4-star, and it's a Global X NASDAQ 100 cover call ETF. It's a cover call buy write strategy in which it buys stocks in the NASDAQ 100s and writes or sells corresponding call options in the same index. Expense ratio is 0.60%. Distribution yield is 10.21%. It's monthly. So the QYLD writes call options on the NASDAQ 100 index, saving investors the time and potential of expense for doing so individually. So here's some of their portfolio holdings. Their top holdings: Apple, Microsoft, Amazon, Tesla, Alphabet, Nvidia, Facebook, PayPal, Adobe. I mean, they're pretty strong. Netflix, Comcast. So it does covered call options: Pepsi, Broadcom, Texas Instruments, Moderna. It's got a lot of firepower. And let me show you the dividend history on QYLD first. Then we'll go to SPHD. They're getting what, 12 cents, 14, 16, starting to go up a little bit, 23. Let's just say 17 cents to 23 cents. It's been pretty consistent with. Okay, that's pretty good. I like the firepower that QYLD offers. I own these guys. Now I'm going to show you SPHD's dividend history. 11 cents, 12 cents, 13, 15, all of a sudden 14, 12, 11, 12. 12 cents for $42.86. And this is supposed to be a high dividend, low volatility ETF. Get out of here. Why would I want to buy something like that? This is actually more volatile than you actually see. And these dividend stocks, you're better off buying, my honest opinion, you're better off buying some of these individual shares like Philip Morris, Kinder Morgan, Iron Mountain, because you're going to get a good bang for your buck with the dividend. You're getting what, 15 cents at best, 14. And they got a ways to go if they're going to keep up with QYLD. One, QYLD is cheaper. Two, it's a better monthly dividend stock. Now, three, okay, price per share, and eventually it'll cost more, but it's got light years to catch up to QYLD with its dividend history. And sure, QYLD will probably be sticking around 17 cents to 23 cents, but that's going to take a long time for SPHD to get to 17 cents. So I don't like the way SPHD is. I used to own it. I sold it. I got rid of it. I'm not a fan of it, actually. I think there's better options. I like QYLD. I like RYLD. I like XYLD. I like PEY. I think that one's a much better one. There's other monthly dividend stocks. I like Noble better. I know Noble's a quarterly dividend ETF, but there's some much better ones. And you know what? VYM, the high dividend, Vanguard VYM, blows SPHD out of the water. And don't tell me that VYM is not as good as SPHD. You're sadly mistaken. Morningstar gives you a 1-star rating, 1 star, and you're a high dividend, low volatility ETF, and you're in the S&P. Get out of here. I'm just telling you, I don't like these guys. If you own them, hey, kudos to you if you got the dip. But I bought them, sold them, threw them into EPR properties. I'm getting a good bang for my buck that way. I'd rather buy realty income, reinvest dividends, get those monthly dividends. I just need to stay away from SPHD and QYLD and just stick with QYLD. It's cheaper, dividends are better, and it's more affordable. So let me know what you think of this video. If you like SPHD, let me know if you own them. But I like QYLD. I'm going to stick with QYLD, and I'm going to continue to own QYLD. So let me know what you think. Would you ever buy SPHD if it starts improving its dividend? Is it attractive dividend stock? From 2013, it made it to 7 cents to 12 cents. Ouch. That stinks. Dividend growth rate sucks. So you tell me if you like SPHD better. So you guys take care and have a good one.